Ira Epstein of Linn Associates with your agriculture update for this Wednesday. And we're now at the 6th of March, 2019, and the time just after 4 p.m. Central Standard Time. If you'll notice in the grain markets, it's down. You know, we go into a big world supply demand report, what our acreage might look like, a little bit talk of yields. It's all going to happen this coming the 8th of March. So that's going to be, what is this? It's going to be Friday. So we've got to keep our eyes on all that to keep things right now where they're at. Understand that this break's been a big one, so now the question is, does it get follow through, and what do you do going into that? The cocoa market had a big time rally today, and energies were a mixed bag. So let's take a look at the soybeans. First, we were talking that the market might retrace back last week to the 18-week average, and as you can see, the market through today is underneath that 18-week average of closes. Okay, you're in that zone. So the question is, we were talking the $9 level. Now you're down to $8.89 3/4, so you're pushing downward. But remember, on the daily charts, here's that $9 level. So for the May soybeans, what I look at now is what's going on right here. Will the market find and grab anything near that $9 price, or is it going to break down through it? In terms of the swing line, you are not trending. What you have is a pattern of a higher high and a lower low. Even if you take out $9, you've got that pattern. As you take a look now, if the market decides to get a reversal to the upside, you're getting the combination of resistance at 917 to 918 3/4, the 18 and the 100-day moving average of closes. If the 18 gets under the 100, it'll be a bearish crossover. And you know, going into the report, the market's already building in that there'll be something in the neighborhood, that's what it's anticipating, of a 3 to 5% acreage shift between out of soybeans into, be it if you can do cotton, corn, whatever you can plant away from it. That is the talk in the industry. Don't know if it'll happen or not, but that's what they're talking. Each time we've gotten under these key lower Bollinger Bands, we have not stayed there very long. I have no reason to believe this time is going to be any different. In terms of momentum, you're oversold. So I have a market that's refusing to trend, is probing an old break low in an oversold condition going into a key report come Friday. You know what I'd say. Why get involved? As you come to the meal, it's different. The meal market, in the sense of different, the chart action. You have a downtrend now, lower highs, lower lows. This is an outside day down today because you took out the previous days, that's Tuesdays, high and low, and closed lower on the day. In terms of momentum, it's trying to point down. It's just turning back. If I go to yesterday, it was trying to point up on this rally. It got 2 days in a row to that 18-day average, 3 days in a row, including today. Now it's making a run at the lower Bollinger Band. But again, why go into major reports? You may want to and say, that's where the play comes from. Okay, everybody's got their own opinion. In soybean oil, you're coming down to a key support level. The lower Bollinger Band combined with the 100-day average of closes. If the report's super bearish, obviously, you can challenge all these things. If the report's a surprise, what do you give up? That's how you've got to ask yourself. You've got lower highs, lower lows in an oversold condition, knocking, just like on meal, into the lower Bollinger Band and possibly back to the 100-day average of closes. On rallies, I'd look for resistance at the 18-day average, and if you were to get over this high that we made right there, which was 30.64, then you'd be out of the downtrend in the market. By the way, let's go back, if I could here, see if I can get this up here in meal. The resistance would be on a rally back to 309.50, and if you were to take out today's highs, I'd call that a bear trap, and I'd look for the market to potentially get up into that resistance zone. That's if it occurred, and I don't know if it'll occur. Plus, on reports, you know, in my charting course, I always teach these things. And what I teach in my charting course is, why get involved in a report that you have no control over? You don't know how the market's going to react to it. Well, what's the logic of that? That's me. I let other people do their thing. In the corn market, you reestablished the downtrend is a market right here is trying to flatten out momentum, but you've got lower highs, you've had the lower lows. See that one there to there. I look for support 369. If you take out this 377 3/4, you negate the downtrend. The wheat market, this is the strongest of the bear markets in the grains. And you'll say, why? Rightly so. And the answer is, notice how you've got the embedded reading. Embedded means that both numbers that make up the slow stochastic momentum oscillator have been going sideways under 20 for more than a few days. And until the red line turns back over 20, what I say is the market gets sold on those rallies, just like you're looking at here. Should not be a surprise. The question is, does it have the power to get down to that 436 level, or is it going to see some profit taking or people evening up before they get all these reports? In the sugar market, it's been consistent to the downside, oversold. We haven't yet hit the lower Bollinger Band. Will we? You could. It just keeps edging away from it. Even with the market down 28 points today, couldn't quite do it. We'll see. Downtrend, a lot of resistance back up at 1278 to 92. But to get to that resistance, you'd end up breaking the downtrend. Because in order to do that, you've got to lower lows, and you'd have to take out a higher, this right here, this high. So that would give you a lower low, higher high pattern. Right now, this is the swing to the downside. I don't know how far it'll go. I look for coffee on this rally to fail. This market has shown that it keeps having trouble at the 18-day average. The seasonals in coffee turn down. But what I look for it to do and how I would trade it are two different worlds. First, you've got momentum coming out of an oversold condition. That's enough reason to be very cautious. You've got a 26 reading. Any reading under 30 is what? As long as one of those numbers is above 20, you're not embedding, and you've got both of them over that. You're oversold. Resistance back at 153. You had lost the embedded reading right here. So as far as I'm concerned, the market still owes hitting wherever that 18-day average falls to. Right now, it's losing about 50 points a day, as you can see. So tomorrow probably closer to the 100 level. Doesn't have to get there, but I'm looking for that number eventually, and then for the market to reset itself. In the cocoa market, this is again my theory that when you first hit Bollinger Bands on the up or down side, be ready for the market to spin at you, especially if you've been going sideways. Now in this case, the question comes, can it push this out, and is it going to create a trend that lasts? You're oversold, you're down again. You don't know. I'm sure if you go to yesterday's tape, I probably said if you get a good rally, look for resistance at the 18 and the 100 day, and you had a bearish crossover. Look what you did today. You came back at it. You're correcting the oversold condition. You can still rally more, but you stopped right into that resistance zone. I think the pros were taking money off at the lower Bollinger Band. In the cotton, I think trades coming out of the market in front of the Friday report. Market got up to the Bollinger Band 3 days. It's stalling. It's overbought. It's been in an uptrend, more or less sideways pattern. Cattle market. I'm moving now to the next month. I'm leaving the April contract. So in the June, you have a lower low, higher high. You hit the Bollinger Band. You stop the rally. You, at that time also, if you take a look, you had an embedded reading. Hit that number. The very next day, if you take a look, you lose the reading. One of the numbers gets under 80. If it stays under 80 the next day, I'm looking for the potential for the market to make a run at the 18-day average of closes. I don't think it's over. I wouldn't be surprised if it hits it. In feeder cattle, hitting the lower Bollinger Band, first time, you didn't quite hit it there. I think there was profit taking in an oversold market. Now the question is, can the market build and start diving down, or is it going to find that it finds support here? Remember, these Bollinger Bands are very important. And I realize sometimes they hit them and you go, ah, shucks, I shouldn't have come out, it's down more. And then all of a sudden you get these spin backs on you. Got to pay attention. You got to learn how to use them. In the hog market, I see a sideways churn, not a trend at all. Look at how you're just trading against the 18-day average of closes. Remember, I'm in the June hogs, by the way, in the May feeder cattle now. So these are different months. I don't see anything right there at all as I look at the charts. You know, one of the ways that a lot of traders like to trade is they want verification of a momentum trend at work in a market. Not price trend, momentum. And one of the tools to do that is one of these called the Ira indicator. And what it does is, the key to this is looking at from the last time the market made a high, for example, how many days since it makes another higher high in the market. You hear me talk about that all the time. I teach you in this video series how to apply it. Probably you have it in your charting software, how to work with it when you get these indicators, what it means, and does it give you the potential for a signal to tell you before price makes a turn that your indicator's making a turn. It's a good thing to learn. How do you find out about it? Give us a call. You can go to our website, sign up for the Ira indicator. If you're doing that, you might as well sign up for the pivot point, and you can always click up here. It'll take you right there. I'm Ira Epstein. You have a good day.